Morning, Steve Free in Chicago with the morning grain comments. Got mixed trade overnight with the bean complex about unchanged, corn and wheat up. Outside markets, stocks are higher, dollars higher, crude's higher, and gold's higher. I think, first of all, markets looking for some kind of stimulus package to help the U.S. economy weather this vaccine storm. We're also noting that slowly we are increasing the vaccines inoculations here in the United States, which is giving support long term to the demand for commodities, raw materials, and as long as interest rates stay low, a higher stock market. So all of this could be a positive down the road. As far as the beans are concerned, I think everyone is waiting for tomorrow's USDA report and see if they actually drop South American crops, raise U.S. exports, raise China import demand, and lower the U.S. carryout. The average trade guess suggests that they'll lower the carryout only 20 million bushels, while other people are closer to 100 million bushels. So I think it's important that the USDA drops the carryout to keep the momentum going and satisfy the managed longs. As far as the corn market is concerned, again, we're not seeing a lot of farmer movement, which limits the hedge pressure above the market. We are approaching or above highs that we've seen since 2013. And I think the market feels that we need to trade higher to ration demand and maybe buy some acres. We did see some interesting numbers last week from one magazine talking about 94 million corn acres and below 90 million bean acres, which some people disagree with, but certainly the corn-bean ratio would favor such a thing. And so most people look for the USDA to raise exports in corn 250 to maybe 300. There might be a little increase in domestic demand. So if they come out below the average trade guess around 1350, that might help push corn futures higher and satisfy the large managed fund long. In the wheat market, we're just kind of passing time. I doubt if the USDA makes a lot of big changes in the wheat, although we are watching pretty closely Russian export policy and if their exports drop. They've been aggressive sellers of export prior to the increase in taxes. And we also note that Europe's probably selling too fast their wheat, and that might shift some demand to the United States. Looking ahead to next year, people are plugging in a 1900 U.S. crop, but only a 730 carryout number, which suggests once we make our harvest lows, wheat prices might rally into the fall. As far as South American weather is concerned, again, we're drying out in Argentina with rains in the northern and central Brazil, which could slow harvest there and the planting of the second corn crop. Here in the United States, we're cold, and we'll probably be cold for another at least week to 10 days. That could cause some issues as far as river freezing and logistics. So we'll just kind of see how all this unfolds. This week's price action is 100% up to the USDA numbers, so we'll watch and see what they say tomorrow. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.